So yeah, the thing I love about this forum, Adam, is we get to take a step back and really just delve it deep into questions. And the Peterson Institute is the Peterson Institute for International Economics. So I really would love to take a tour around the world with you and look at this issue from a global perspective, because it really is one. I tell my friends and colleagues, if there was ever a time where we were, like, for better or worse, united, this is it.
It could be for better. It could be for better.
It could be for better, exactly. And so that's exactly my question to you. So the Peterson Institute is at the forefront of promoting global integration, free trade, openness, international cooperation. That trend had been under threat before, and it's still under threat, perhaps more severely now. Of course, this crisis engenders some need for cooperation, but there's also some tension. Can you talk about how you see those two things playing out?
I think we have to start by explaining just briefly why people at Peterson and elsewhere are committed to making globalization work and not reversing it. I mean, you see that right now. As my colleague Chad Bown has published a series of pieces, they're getting a lot of play deservedly. You can't disentangle yourself from global supply chains in order to get everything you need, whether it's food or medical supplies. I mean, people say, oh, we went too far. We shouldn't be getting this stuff from China or wherever. But the fact is, we're getting stuff from Canada. We're getting stuff from Mexico. We're getting stuff from the Netherlands, from England. And so every time that President Trump or someone of either party who decides they want to cut us off from the world, they are making us more vulnerable. And those unemployed people, the poor people in the US, are the first to suffer, because you're reducing supplies, you're raising prices. And what happens is that means it just goes even more to the rich people, these medical supplies and services. Same is true of food. Same is true of all these basic things. You cannot, it's not just a question of modernization or cost cutting or excessive globalization. For centuries, going back to the Roman Empire, you need lower income people to come pick your crops, because higher income people won't do that work. And then the food rots in the fields. And those people need to be able to cross borders in order to make their living. So you cannot get away from this. And this is even more true in the pandemic, as you're talking about, Pedro, because you can't get away from the disease. We'd like to say, okay, we cut off travel. And if we cut off travel by this date from Europe or this date from China, we would then be safe. But, go back to the Great Flu of 1918 to 1920. There were tiny islands in the Pacific that after a few months got infected with the flu. There was literally no place on Earth that didn't have the flu. And that was in the aftermath of World War I, with no commercial air travel, no internet, no globalization of the sort we know now. So the reality, the hard-headed reality, is not.
Turns out to have affected my great grandfather in Rio de Janeiro in 1918. Turns out he died of the Spanish flu. We came to March. So.
Yeah, and so it's not like there was huge international tourism and travel back and forth from Rio or Sao Paulo in 1918. I mean, so. The rational realist thing is to think about how to make these international integration work. But you're absolutely right. Things are going backwards.
Chad and your colleagues have pointed out in that context how actually some of the trade war disruptions that were happening ahead of this crisis have made it more difficult for everyone, but also for the United States to get the goods and product, medical equipment even that we need, right?
No, absolutely. And this is happening in Europe as well. I mean, it's not just the US, it's other countries. Europe put on this export ban on their medical supplies that they were producing, and it backfired on them. I mean, even rich countries, even large rich economies like the US or EU, take it as a whole, can't fully self-supply. It's just not possible. Moreover, I mean, there's a lot to talk about the globalization issue. But the biggest thing where globalization has not delivered is not for the people of the rich world. It's not for the people of China. It's for the people of Africa, Latin America, South Asia. Even there we've delivered, but we haven't delivered them all the way. So in other words, the bottom line is there's going to be horrible death and disruption in developing countries. It's already started. There's been a huge outflow of capital from those countries. The IMF, World Bank, and others are trying to get some of the money back in so that those people are not deprived of everything they need and they don't incur horrible debts they shouldn't have to. But that is the real divide in the world right now. Everybody's got the disease, but it's how much you suffer, how resilient your society is.
How worried are you about the emerging world, as it's called, in terms of the crisis hitting, health infrastructures that are even less? I mean, we're seeing just how strained rich countries are in the face of this virus. How do you see this playing out in the emerging world? And can you talk a little bit about the things that you and others have argued the G20 can do to help?
Thank you for that. The picture is very grim. The one bit of good news is we're seeing increasing evidence that the disease, statistically speaking, is much less deadly, much more contagious and much less deadly than we first thought. So like the news that just came out about this study, a small random sample of pregnant women being admitted for delivery in New York, and it turns out some vast share of them are infected and very few of them are symptomatic, and there's various other data points coming in like that. And so that's the one bit of good news, and that's not about economics, that's about the fundamental biology. So that potentially the death rate is going to be much lower once you count all the people who got sick. It's still going to be horrible. Other than that, the global public health picture in developing world, and I say developing world where the emerging isn't about PC, it's because there are certain developing countries like your friends in Brazil, a few others that are big enough and sort of on the right side of the divide that they can get away with running fiscal policy. They already have something of a welfare state. Our mutual friend, my colleague, Monica Boltabola, of course, has been pushing for universal basic income in this emergency in Brazil, and Brazil can afford to do something like that. But then you've got a host of countries in Central America and South Asia, in Africa, that can't do that. So you get caught in not only is the healthcare system overtaxed, but you have people living mostly in very tight conditions, bad living conditions, not great sanitation, huge population density in and around urban areas. You have lockdowns, as we've seen very visibly in India, which may or may not be the right thing to do in this context. That's a very real question, but which clearly don't protect the urban poor and the people in slums. And unemployment is much more meaningful for the informal sector people in these countries. You saw the millions of people in Mumbai and Bombay, just to pick an example, who had to go back to their home villages because they had no way of making a living. It was hand-to-mouth cash work to make a living day to day. And when you have a lockdown, maybe the middle income and up people lock down, but then they stop interacting with all those poor people. You have to go.
The notion of stocking up for 2 weeks of food is not feasible for millions and millions of human beings on this planet, including in this country, right?
Absolutely. And that is part of the reason we keep hammering on this idea of making globalization work. Because as much as people talk about inequality and problems of globalization, if you're closed and you're not taking advantage of the diversification and the multiple sources of supply and the checks on government and the flows of people and information for health purposes, all these things, it's the poor and vulnerable who get hit worst in the US as well as in the poor world. You had said, I don't want to be so negative because there are things we can do that will make a material difference. You had said work we've done on the G20. Maury Obstfeld and I edited a short piece, which I hope people will read. It's very quick, but about practical steps to make life better in the world. And the key point is, going back to where you started, Pedro, this is about collective action. So usually people are used to economists thinking in terms of trade-offs. Well, if we have more of this, we have less of that. Or international relations, not as much as Donald Trump makes it out to be, but is often thought to be zero sum. If I'm gaining, China's losing, and vice versa. There are situations in international economics where it's what we call collective action problem, where it's just, there's no competition. If people join together and get past this trust, you could actually get things for everybody that you couldn't get otherwise. And it's not privileging one country versus another. It's not taking away from one to another. And those are the kinds of things we emphasize. So those are things like swap lines that give temporary liquidity in dollars to strained financial systems in emerging markets and developing countries. Emergency aid from the World Bank and the IMF is very cheap, but very important support for how to distribute vaccines, how to distribute antivirals when we have them, whether it's refrigeration or safe distribution networks or administration instructions. Restoring freer trade in medical supplies and food so that the people don't hoard in the rich world. And we have a better sense, transparently, as Chad and others have argued, about where the supplies are and where the bottlenecks are. Leaning against dollar appreciation, which sounds like a selfish US thing, but actually in the current context, when all the world's money almost is flying into the US and a few other safe havens like Switzerland and Norway, the dollar goes up a lot. And for poor countries who need to buy food, medicine, technology, pay debts in dollars, that makes it even worse. And when you've got energy prices cratering, it's good for most people. But of course, there are a bunch of countries who export energy and export copper, and nobody's building with copper at the moment. So there's room for us to all lean against excessive dollar appreciation. And that, again, doesn't cost very much money at all, probably get most of it back, and it helps everybody. So these are the kinds of things we should be talking about at the international level.
So beyond the health cooperation and actual, medical know-how and supplies getting to the places where they need, I imagine that there's a sort of preventing a deeper financial crisis component to this as well. I mean, there's a lot of smaller or larger but less developed African economies and Asian economies that issued a lot of bonds in so-called good times. And I would imagine that having financial crises in one or more of those countries would aggravate a pandemic by definition.
You're absolutely right. And I mean, we have to appreciate the scale, but also the nature of what's happening right now. So even during 2008, 2009, global financial crisis, Asian financial crisis 20 plus years ago, you have huge flows of money out of these countries into, again, the safe havens, the rich countries. And that increases the amount of debt in real terms that these countries have to pay, and decreases usually the amount of money they have. And also, because it's a recession, usually increases the amount, whatever degree they have a welfare state and public spending, increases the demands on it. So now take each of those factors and amp them up for the pandemic. More money's going out. So we had more money leave the developing world in the last 2 months than left the developing world in the entire 2008, 2010 crisis. More of a recession, because you've talked about the horrible unemployment numbers here in the US, even if it's not sustained, God willing. It's an enormous contractionary shock. And then more demand for public spending and public services for global health pandemic, even more than just trying to keep the poor going. So this is an enormous burden on the developing world. Over 90 countries have applied for emergency loans or assistance at the IMF and the World Bank simultaneously. In the worst crises, we've usually seen 20 at most. So there's a huge challenge on how to do this. Now, there's one piece of good news to that, which is the rich world knows that none of this is those countries' fault, right? Wherever the disease started, it wasn't because some African government ran too much debt or some South Asian government was too loose with their fiscal spending. That's not what's going on here. This is something they're totally not their fault, which suddenly changes their whole debt picture. And so the big emphasis this week around the G20 and the IMF meetings, IMF World Bank meetings, is to try to get some form of the same kind of rollover of debt, not building up new debt, not requiring current payments that we're trying to do for small business in the US. It's the same thing, trying to do that for governments and some entities in the developing world. And there's some real progress, to be fair. I mean, there's some genuine progress. The IMF and the World Bank and the G20 have tried, but there are issues, as you've reported on and written about in the past, about these so-called vulture funds and various holdout investors who, this is the worst part of it. If you say the official sector says we're not going to ask you to make interest payments now to loans coming from us, but then maybe the private people still keep going. Think of it as the government says, okay, you can postpone your taxes till July 15th in the US for a household, but the local loan shark says you still got to pay me.
So is there a risk? Who holds the bag on the northern side? Is there a risk to US, European financial systems from the lending that's been done in the emerging world?
I think it's a good question to ask. And certainly in past crises, going back to the Latin crises of the 80s, which you're all too familiar with, there has been this issue of Western banks overextending, getting themselves into trouble, which has had sometimes the beneficial side effect of encouraging the Americans and the Europeans to actually put more money into rescuing the poor countries as a way of rescuing their banks. Right now, I think that's actually much less of an issue that's been in past crises. A lot of the money that went into the developing world was in more liquid form, bonds, securities, investment funds, or investors who are not banks, hedge funds of various kinds. And the banks themselves in the US and Europe are genuinely better provisioned and better capitalized than they were in, say, 2008. Now, I know your first two episodes were with two people I admire, Sheila Bair and Tom Honig, and I'm sure you talked about the questions of, how much has the supervision of banks really improved? How much has that been rolled back over the last couple of years with changes at the Fed? And that's a legitimate thing. But I think we have to recognize the reality as a forecaster that the US financial system, the European financial system, even if it's not ideal, are in much better shape to weather this than they would have been in the past.